Welcome to this week's market drama. We'll begin with the markets. The S&P 500 was flat this last week. NASDAQ did a little bit better, up 0.2% for the week. Now that we're halfway through the year, we could evaluate how the first 6 months looked for the stock market. The S&P 500 was up 14.5%. NASDAQ was up 18.1%. How does that fare versus prior years? Well, this year would put the stock market in the top 7 years over the last 35 years, right? So a really strong start to the stock market. And not only have the markets gone up, but they haven't really been that volatile. This year, when we look at the VIX, which measures stock market volatility, the average has been 13.8, which is the lowest seen since 2017. So market is going up and not a lot of downside that we've seen so far. Why is that, right? The story continues to be earnings have delivered better than expected. Inflation, even though it's been taking longer than expected, is starting to calm down. And US economic growth overall has not gone into a recession, right? So all those things combined have given a lot to cheer when it comes to the stock market participants. So what sectors have driven the market performance? The gains have been led by technology stocks, communication services, and financials. The only sector that's down this year is real estate, but is heavily concentrated, right? So technology stocks have accounted for 30% of the returns so far this year. When it comes to this week's economic data, we did see personal consumption expenditures index, the PCE index, come out. For PCE, which excludes energy and food, which tends to be the most volatile part of the index, showed an annualized rate of growth of 2.6% in May, which was lower than in April. It's actually the slowest we've seen for inflation in more than 3 years for this metric. So that kind of gives credence to this idea that the Federal Reserve could start to lower interest rates as soon as even September if they continue to see this metrics of inflation coming down. We also had numbers of consumer spending rise, pretty much right in as expected. It kind of solidified the view here that yes, consumer spending is slowing down, but is not halting to a stop. Next week, we have June payrolls, and we also have manufacturing PMI data, which will give us an indication of kind of a pulse of how the manufacturing is doing here in the United States. We also have the release of the minutes from the June 11 and 12 meeting of the US Federal Reserve. So investors will take a look at that to see if there's any change on how the Federal Reserve is looking at the potential of lowering interest rates later this year. That is it for this week. Stay tuned for next week.